What's going on, everybody? Q here from Hyperstocks. Thank you so much for checking in. In this video, I'm going to show you guys two patterns that have been absolutely dominating the stock market in the recent months. These patterns are key patterns that will help you identify bearish reversals in the bearish market. So as you know, the stock market is right now falling in fears of a recession. We've been doing so since the beginning of the year. But one thing we've seen throughout the months is these patterns have been very consistent in identifying the trend reversals. So we're going to start off with what the patterns look like, and I'm going to show you guys how to play them in the later part of this video. So first of all, let's talk about the double top pattern. The double top pattern is exactly what it sounds like. This is a pattern that shows a rejection at the same exact price point at two different times. Now the times could be 1 minute apart, 2 minutes apart, 10 minutes apart, or days apart. Just keep in mind, the longer the time frame that they are apart, the more significant that pattern becomes. So if you're looking at the 5-minute candles and it gets rejected twice at a double top in just 10 minutes, that means that pattern can send us down, but that doesn't necessarily mean that the market is fully reversing. This will make more sense when I show it to you on an actual chart and how that applies. The second pattern is going to be called the triple top pattern. This pattern is also a bearish pattern. It's very similar to the double top pattern. There's the 2-time rejection on a double top. The triple top is a 3-time rejection, also sending us lower. Now, the double top and the triple top pattern, by theory, just mean that when you are moving up, if the stock market is moving up, or if the stock that you're watching is moving up and it gets rejected at a specific price point, that didn't just magically happen. It happened because buyers were simply not willing to pay that price for the stock at that given time. So if the buyers weren't willing to pay for it once, and then once again they're not willing to pay for it again, by that I mean they weren't willing to pay anything higher than this level. They said no more, this is the max price we're willing to pay. And if that happens twice, it's an automatic profit taking signal. That means that whatever you're watching is not growing in value at that very moment. Therefore, the buyers are going to want to take profits. You're going to want to set up a price target for yourself. That is a different video. Make sure you guys subscribe to the channel. That way we can give you that video in the future. That way you understand how to set price targets on a chart. But for now, let's focus on these two patterns. The triple top, same idea here. You can see that 1, 2, 3 times buyers tried to take it above that point, but they failed 3 times. What do we notice about both these patterns is that both of them came through in a near vertical rally. So anytime that you want a breakout to happen, you want the breakout to happen in a nice, smooth fashion. You never want a breakout to happen in a vertical way, such as this way. If you're watching a stock and the stock is moving up in this way and in this manner, and it hasn't really come back down to retest supports throughout the move up, that means there's a ton of gap space to fill to the bottom. So anytime you see a double top pattern, when there's a lot of space to fill to the bottom, that means that you could be rejecting all the way back down. I'm going to show you guys how this played out today on June 28th on the stock market. So you can see that the stock market just last week and this week, it had rallied, but notice it never really retested this area right here. So when we broke above 382, we rallied, but most breakouts, they need to retest in order for them to be healthy breakouts, in order for people to trust them. So as long as this area wasn't tested, that means that this breakout could fail and it could fill this back down. You can see that we moved up all the way to 393 yesterday, and we did this in pre-market, which brings me to the point of why it's so important to watch pre-market and post-market hours. This pattern was identified as a double top pattern this morning because we watched the we watched the pre-market hours yesterday, where you see we got rejected at 393 on SPY, and once again this morning at open we got rejected at 393, which shows an exact double top that we were just talking about. You can see that here we never retested, here we were nearly vertical when we tested. Therefore, we can assume that the rejection sends us back down. Make sure you guys stick around. I'm going to show you how you could have played this if you were looking to trade this for yourself. But next, let's talk about the triple top pattern first. So the triple top pattern is very similar, as we said, to the double top pattern. I'm going to go back in time here, and I'm going to show you guys on the daily chart of how the double top and the triple top pattern have played out. So here's an example of where the triple top pattern sent us down. You can see that one time here we moved up to a high of 430, and twice we moved up to a high of 430, and 3 times we moved up to a high of 430 and we got rejected back down. Let me show you how that looks on a shorter time frame. When we're identifying that pattern, it would look something like this. Let's see. Here we go. So the pattern here rejected at 430 one time in post market, one time towards the end of the market, and again at the end of the market, which was the triple top pattern. 1 was vertical, 2 was vertical, and 3 was vertical. You guys noticing vertical moves don't stick. If there's a vertical move, especially if it's a vertical move in a bearish market, that means it's just a squeeze and it's more than likely going to come crashing back down. So here's the double top pattern, which you could have played back down, and here's the triple top pattern, which actually led to a deepened sell-off in the market in the following months. So that's just identifying the patterns. So knowing when the patterns are happening and expecting them is important. So how to play them is the next question. Playing the triple top and the double top patterns is going to be more favorable when you are in a bearish market. So if you're in a bearish market, you want to identify bearish patterns, not just bullish patterns, because bullish patterns will work most on bullish markets like double tops and double bottoms and triple bottoms. So for example, here's a triple bottom pattern that didn't really do much. Here was the 1 bottom, 2 bottom, 3 bottom, which is technically a bullish pattern, but you can see because we are in a bearish market and trend and overall momentum is leaning down, these patterns won't be as effective when you're playing them in the opposite side of the market. So when you're in a bearish market, like the market we're in right now, that's going on with a recession and all these negative headlines, you want to identify the bearish pattern. So look for the rallies, wait for those rallies on the market, and then identify the bearish patterns that can come from these rallies and wait for your chance to enter. Here's your chance on how you could have played the SPY sell-off today. You could have used a short setup or a put setup in this very scenario. So here we know that last week on Friday, the market broke above 382 and it rallied all the way up to 390 on that day. The next day, we noticed in pre-market, we got rejected at 393. So during this rally, what we noticed is that when the rally took off, we never retested 392. So a successful breakout typically means that we break out, we retest, and then we move higher. Here we never retested, so we knew there was this space to fill. So now that we know we're in a bearish market, there's a gap down to fill, we can already see where our price target would be. So if we were to get into a short setup, our price target would be that retest, which is right around 382. So we noticed that we got rejected at 393 here in pre-market, but that still wasn't good enough. We noticed that the market kept consolidating on that, and we didn't really get too strong of a rejection in order for us to justify getting into a short or a put setup. But here, once again, the following day, which was today, we got rejected at 393 once again. So knowing what we know, knowing that this is a double top pattern, that it's a very bearish pattern, then we can say, okay, we can wait an hour and make sure that this rejection is actually going to stick. We wait the hour and we notice that the market wasn't able to get above 393 on the first hour, and then the next hour closed us all the way below the support of the 50-day moving average, which is shown in another video. We have a moving averages video on our channel. Make sure you guys subscribe. That way you guys can get to see these videos, and make sure you like this one too. But back to it. If you got into a bearish strategy when you are trading this pattern, then what you want to do is you want to enter your put or your short setup anywhere below 393, and you can place a stop loss just above 393. Now, if you're in puts, you're not going to be able to place a stop loss above 393. You have to just wait to see if the market breaks above 393. That means that the bulls and the bears came to agreement and they said, you know what? We're willing to pay more than 393 for this, so we can expect a rally from there on. But as long as we don't peak above 393 again, then you know that that double top came through and it actually followed through to selling off, making your strategy work. So if you got into your puts here at the beginning of the day, for example, and you held them all the way to the price target of 382, you can see that SPY puts right now are trading. If you got in, for example, you can see that SPY puts since the beginning of the day, they have rallied more than 200%. So you would have walked away with a pretty significant gain just playing the double top pattern as I showed you here and making the retest your price target. Now keep in mind, price targets, you can derive them in many different ways. In this example, we use the retest, but there are different ways to get your price targets and take profits throughout your day. I hope you guys liked this video. I hope it helped you see some kind of bearish patterns to help you through the recessionary market. Have a great day. Make sure you give us a thumbs up. Thank you.